So as you guys know, NVIDIA has really grown so large and profitable at this point that they're actually investing in other AI companies and their stocks, especially smaller ones that they often even partner with on new AI projects and innovations. Well, up until last quarter, they had spent more and more each time, nearly doubling their stock investments in the course of just a year, totaling close to $500 million. However, in Q4, this was just released to the public from the SEC. It's the most recent information that we have right now. Well, those investments actually got cut down to around 300 million, meaning they did a ton of selling in the quarter, which, don't get me wrong, that is a big deal. They sold out of several AI names. So I'm actually going to make a separate video to cover each of those after this one, because there were actually some pretty popular AI stocks that they sold out of. And it's important we'll talk about that. Make sure you're subscribed so you don't miss that video. But something that I think a lot of people are not talking as much about is the fact that they actually picked up two brand new AI stocks during the quarter as well. And it kind of flew under the radar because everyone was so focused on the selling, they didn't notice NVIDIA actually bought two brand new AI stocks. So in today's video, I'm going to cover each of those two stocks. I'll even let you know if I plan to buy those stocks myself too now, knowing that NVIDIA is a big new investor and those stocks have actually fallen quite a bit too more recently. So yeah, we'll take a look at it. But let's go ahead and start with the smaller purchase first, and that was in a company called WeRide, ticker symbol WRD, which is already worth over 8% of their entire portfolio after purchasing close to $25 million worth of the stock in that single quarter. Now, who is this company? What is WeRide? Well, believe it or not, it's actually a Chinese company and a self-driving one at that. Not just for robotaxis, but even for various works and projects too. Back in July, for example, they launched the first unmanned sanitation project in the city of Dongguan. Please forgive me, I'm going to mispronounce these cities, their names, but that was in China. And then right after, the very next month, they actually launched a robo-sweeper service in the city of Shantao. But robotaxis are just as important for them too, gaining regulatory approval back in August for their robo-bus to start charging fares in the city of Hengqin. Now, it's a very interesting company because we all know that analysts are really projecting the robotaxi market to be worth trillions of dollars long term. But city services like, sanitation and sweeping, those kinds of things, they're often kind of slept on because they're just not as exciting or eye-catching as the robotaxi businesses. And yet these two could actually be worth gigantic amounts of money in terms of their market size as well. Because we all know, how inefficient governments tend to be. They love to spend money. And so you come at them, offering these types of services. By the way, these services might actually save money, because they're autonomous. So that might entice the governments even more to adopt them. But yeah, long term, these are some services that could actually be worth a lot of money that I think are just kind of being slept on in the field of autonomous driving. And the great thing about WeRide too is that they're not just limited to China either. In fact, they're already expanding into France and the United Arab Emirates through partnerships with Betty and even Uber. Now, those will be robo-taxis, but they're even entering the Singapore market with their robo-sweeper business too, as well as the robo-bus along with that. Now, as high growth as that business might be long-term though, is this an overall stock here that I would want to be investing in myself too, along with NVIDIA? Well, unfortunately, the price has actually risen quite a lot since NVIDIA's position got disclosed to the public, with it soaring by over 30% just this past month and even reaching a high of over $40 a share. Now, that did get cut like in half from the top more recently. A lot of AI stocks have just been falling recently, but it's still up over 20% since IPOing last year. More importantly, though, is really how that price relates to their financials, which are severely lacking, and that's kind of putting it mildly. their net income, for example, net income losses have actually been getting worse every year, and even they're even hovering around 4 times larger than what they generate in sales. Now, speaking of which, sales even dipped last year, and I couldn't find any analyst estimates for the upcoming years either. Now, don't get me wrong, sales are obviously going to soar from here, as this is still a very small company with a ton of growth potential. And during that time, I do expect losses to maybe slowly improve gradually as well as they bring in more money on the top line. But when you're talking about a price to sales ratio of more than 100, I mean, you would need revenue growth of at least triple digits consistently for many years just to justify that rich valuation. And for comparison, a couple other Chinese autonomous driving companies that I actually do own myself in Baidu and even NIO, one safer, one much riskier, but both of those are way cheaper and by a huge margin. Baidu with a PS ratio of only around 1.7, while NIO trades at less than 1. Again, WeRide is over 100. So, it's a bit too rich, I would say, for me, at least at the moment. But hey, I think NVIDIA really sees this as more of an opportunity to just partner with a Chinese company and gain greater exposure to the Asian markets over time, even fitting in right in with their NVIDIA drive technologies, which also has hundreds of different partners, including, by the way, several other Chinese names like Baidu, NIO, and even BYD and more. So it's not very shocking to me that they would partner here with a smaller startup like WeRide too. NVIDIA already being at their massive size, they don't really have much to lose here, even in investing in the stock. Which, by the way, every time that it gets disclosed that NVIDIA is backing one of these companies, their stocks tend to go up anyway. So it's probably benefiting NVIDIA in multiple ways. But yeah, it's still a stock that I probably won't be picking up myself, at least not yet. However, the next stock is actually one that I think is much more interesting, and that was the larger of the two purchases. That was in another AI company, this one known as Nebius, ticker symbol NBIS, which NVIDIA picked up almost $33 million of during the quarter, and it's already worth over 10% of their portfolio. Now, if you've never heard of this company, they're mostly a cloud computing company, for example, operating a very large AI-focused data center in Finland, which happens to use tons of NVIDIA GPUs that it then rents out to customers so that they can build, train, and run their own AI models and applications using the hardware and software solutions that Nebius provides, at usually a much smaller fee too compared to the bigger players in the space. Obviously, this is also a very high demand type of service here, especially right now with AI exploding over the past couple of years. And that's resulting in many companies and developers just, happily being willing to pay for all of these services. And that's helping out a company like Nebius. And yet, as if that, would probably be enough, Nebius actually owns several other subsidiaries too that could also be just as promising for them. For example, they own Toloka, I might be pronouncing that wrong, but this is a company that helps customers analyze, organize, fix, and prepare all of their data for use in training models using a combination of both AI as well as human experts too, who review and label their data as well. And that's, actually another very high demand service right now, thanks to the popularity of generative AI. Going to Toloka, letting them gather up all your data, organize it, label it, get it ready, prepared for the use of generative AI, for use of data analysis and management. Yeah, that's something that companies will happily pay for at the moment. On top of that, though, they also own Triple 10, which is a leading online education platform that trains people in business analytics, cybersecurity, data science, quality assurance, software engineering, and more. And by the way, like WeRide, they even own another AV type of business in the self-driving technology and robotics company called AV Ride, which is based in Texas and has already collected more than 22 million miles of autonomous driving without any serious accidents, which ranks among the highest out there. And so in turn, all of these businesses in one is actually resulting in a lot of growth for Nebius too. Now, at first glance, if you look at their financials on any finance website like Seeking Alpha or Yahoo or Google Finance, you'll notice that all the figures are actually really strange looking, like generating hundreds of billions of dollars in revenue in prior years before suddenly crashing this last one to where they only did about 100 million in sales with hundreds of millions in losses. But Guys, that's actually because this company was spun out from a giant Russian one called Yandex, which is kind of like the Google of Russia. Now, this happened because of the Russia Ukraine war, where basically the owners sold all of their Russian assets to investors in that country so that they could then distance themselves from all the controversies and even regulations related to it. And then they separated all of their international businesses into this new company called Nebius, which is basically housed in Europe and is slowly trying to expand across the continent as well as here in America. And so when you adjust for that, this new company, while it probably won't be profitable anytime soon, it is at least growing their revenues by a very high clip, and it's kind of alarming. Last year, for example, they grew sales by over 460%. Now, it's still not as high as their losses, but they do at least have about 2.5 billion in cash that should easily cover those losses for at least a few years while they slowly work their way into profitability. On top of which, thanks to all the contracts that they already have in place, as well as a bunch of new ones coming down the pipeline, which is also thanks to NVIDIA's new Blackwell line of GPUs coming online later this year, well, they're actually expecting their annual revenue run rate to increase from a couple hundred million in March up to as much as 1 billion by the end of this year. And that is a great sign because the valuation is actually very expensive at the moment. Now, I'm not entirely sure these numbers are correct here, but Yahoo Finance puts them at a trailing price to sales ratio north of 70. However, if they start generating around a billion per year and you compare that to the market cap, well, that price to sales ratio should plummet all the way down. I calculated to around 9, which is actually much more attractive going forward. And that's why investors are getting so excited about this stock here, which has climbed almost 70% since being listed as a new company last year. Now, since then, they have seen some crashes and dips, notably this one here. I think this was during the DeepSeek crash, and then another one more recently on several AI stocks falling too. So it is a pretty volatile stock that you should probably be aware of if you're thinking about jumping in. You probably have a bumpy ride with it. On this most recent crash though, and considering the high revenue growth and future potential from AI, is this a stock that I'd be willing to buy now? Well, I certainly find it much more attractive than WeRide, and that's simply because of two reasons. Number one, the much more diversified business where they actually own several other ones within and are doing a great job of diversifying as much as possible within the confines of being an AI focused company, really branching out into as many adjacent areas as they can, which shows me that this is actually a pretty ambitious company that is trying really hard to stay competitive and grow. I love to see that in companies that I invest in. And by the way, it certainly helps that the founder and current CEO is also the founder of Yandex, which again grew to become essentially the Google of Russia and has seen tremendous success too. So I wouldn't necessarily bet against this guy, but reason number two, on top of all that, they also have the much cheaper valuation with also higher growth compared to WeRide. And while they used to have big ties to Russia, which some investors, may be put off by depending on how you feel about that whole situation, well, I believe that all of the Russian ties have now been severed. So it's probably not as big of a concern to Wall Street anymore. I mean, I have no idea how strong their brand is right now among consumers, but from just doing some quick research online, it seems that they don't even allow any customers from Russia either. So they're very, very much, separating themselves from that. Regardless, putting their origins aside, just looking at it from a business standpoint alone, I think this is a very interesting stock here. And if I wanted a speculative name in AI that maybe doesn't have quite as much attention as some of the other big names out there yet, then, this would be high up on my list for buying a small amount of as a speculative play for the future, just in case. And again, I like them way more than WeRide too. Having said that, I'm still not quite buying the stock myself, and there's 3 primary reasons for that. The biggest of those is that I just already own way too many AI stocks as it is, so I don't really have the hunger or even the time to invest in picking up another one here that is also riskier and that I'd have to keep a much closer eye on and keep track of than some other names that I already own. Number 2, on basically all my favorite finance websites, I can't find complete analyst coverage or projections for the future, which I've told myself in the past that, if this was the case, it would pretty much be a deal breaker for me, because if I can't quickly get accurate, up-to-date information in a very easy to find way, and instead I have to go digging through all of their finances to make the calculations myself and even try to make every future prediction too without any analyst insight to help me along the way, well, then it's probably just not worth my time and effort at that point. I'm already a very busy person as it is, so a stock like this would have to be, an absolutely amazing type of business that I'm super excited about to convince me to want to buy it under those conditions. And finally, number 3, not a huge deal, but something that I do think is worth considering at least. It's just the fact that, really both of these companies actually are going to have to compete in at least one way or another with some of the biggest tech giants in the world, like Amazon, Google, Microsoft, Alibaba, Baidu, and more. It may not be totally direct competition, but those companies do offer very similar products and services. And while I do think that Nebius, for example, does have some great differentiators and are well diversified and are very competitive on price too, I think are cutting out a nice piece of the market for themselves. I still think that it's something that is worth keeping in mind, that you could probably get exposure to most of these markets that they operate in with much safer stocks instead, that you'll never have to worry about owning. Now, obviously, they'll have less growth potential, but it's at the benefit of being a lot safer. Again, though, that's not a deal breaker, and who knows, maybe I will actually pick up a small amount of this one just as a small speculative play for the future. But at the moment, I think I'm still holding off for now, just because I have too much on my plate already as it is. But hey, what about you guys? Are any of you buying these stocks? I'd love to hear your thoughts down below. Thanks again for stopping by, my friends. Hope you enjoyed the video. More videos coming. I've been busy. I've been doing a lot of stuff. I've been renovating the studio and I've been doing other things. But I'm going to be making more videos soon. So look out for that content. Make sure you're subscribed. Thank you, my friends, for all of your support. And I will catch you in the next one. All right. Take care, everybody. Bye-bye.